Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into Origin Bancorp's latest filing, and let me tell you, it seems like they found a little oopsie in their homework. I'm your host, and we're about to untangle this financial tale. Origin Bancorp just released an updated version of their financial report for the first 3 months of this year, ending in March. This isn't just a regular update, it's an amendment, meaning they had to fix something. So what went wrong? The company had to refile because management realized their initial checks and balances weren't up to par. Specifically, there was a material weakness in their internal controls. In simple words, they found a significant problem in how they manage and report their money matters. This led to the conclusion that their disclosure controls and procedures were ineffective, forcing them to amend the report. So, what exactly are disclosure controls and procedures? Think of them as the company's way of making sure all the important financial information is accurate and shared properly. It's like double-checking your answers before handing in a test. Management, including the top boss and the money boss, is responsible for ensuring these controls work well. However, in this case, after reevaluating, they admitted things weren't as tight as they should be. The problem, it's all about those manual transfers between deposit accounts. It sounds like some employees had a little too much freedom to move money around without enough oversight. Now, before you jump to conclusions, a material weakness doesn't automatically mean someone was doing something bad. It simply means the potential for errors or even fraud was higher than it should have been. Interestingly, Origin Bancorp says that during that period of January to March, they hadn't noticed any changes in their internal controls that would have flagged this issue. That's probably because they hadn't yet discovered it. The company admits there are always limitations to any system. Things like budget constraints, human errors, and just plain old mistakes in judgment can happen. They also point out that even the best systems can fail if people don't follow the rules or if conditions change. Now, let's move on to the exhibits. These are basically the documents that support the financial report, and it has certifications from the CEO and CFO stating that the information in the report is accurate and truthful to the best of their knowledge. They're signing off on this, making them personally responsible. What's interesting, however, is the date on the amended certifications. We're talking about a report for March, but these certifications are dated February of the following year. This delay underscores the fact that the problem wasn't caught until well after the initial report was filed. Origin Bancorp has about 31 million shares of common stock outstanding. This is important, as the number of outstanding shares can affect things like earnings per share and market capitalization. It gives you an idea of the size and scope of the company. Now for the money numbers. In financial reports, there are a lot of tables and numbers, and it can be difficult to find the important part, so let's scroll down a bit. Net interest income, which is the difference between what they earn on loans and what they pay on deposits, came in at roughly $64 million. This is a core measure of any bank's profitability. Non-interest income, which includes fees and service charges, totaled about $17 million. This can be more volatile, as they say in the business, meaning less reliable than core interest income. Now let's take a step back. Origin Bancorp had to restate their financial filings. This is not good. Here is what I think. On the one hand, it's good they caught it themselves, so that is something in their favor, but a company of this size shouldn't have what is considered a material weakness in their internal controls. It really erodes investor confidence. The weakness being about employees making manual transfers is interesting. I am not saying anything bad happened, but the lack of oversight would have allowed it if it had. This is where I'm seeing weakness. There is a certain lack of oversight and control in this organization at a lower level. There are a few ways to look at this. One way to look at this is that there is an organizational weakness. The risk is that people don't trust that numbers being reported are as good as the numbers that should be reported. However, if they fix the problem and they get their act together, it can be a strong sign that they have their act together. Now it's time for the company to prove that this event was a one-time mistake and to turn things around and put this event in the past. Origin Bancorp has some work to do to regain investor trust and show they're serious about financial discipline. It all boils down to fixing that weakness and preventing it from happening again. Thanks for watching. If you enjoyed this video, please give us a like, subscribe, and leave a comment below.